IZ Corp Radio, 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 IZ Corp Radio. Good afternoon, ladies and gentlemen. You're listening to IZ Corp Radio, and my name is Mr. Lords. This is Lord Reese Harts. Now, what we're doing today is we're analyzing the market. With that being said, we're looking at, when we turned on the screen, again, this is Smart Investor Society as well, and you're listening to IZ Corp Exchange Radio. So what happens is we're looking at the market today. So we woke up, when we turned the market on, the market was down 360 points. So immediately I got on the phone with Engage Research, and they're pretty much based out of Australia, but that's just the headquarters. And what we came up with was they immediately told us it's because China and its trade war, and the China market actually is down 700. And if that reflected the U.S. market, then the U.S. market would be down 11 and 3/10 on the day. So we kept going, and we find out, we say, okay, everybody says, well, this trade war thing, this tariff war between U.S. and China. We say, really? Because this trade war thing has been going on pretty much for decades. And what we understand is, a lot of these communist countries, they actually wanted President Trump. They actually wanted President Trump to lead this administration. So for people to say, well, you know what, this trade war is because of tariffs and such is kind of a stretch. Being that you live in we invest in, we trade daily in a really volatile market, and we think that's because of technology and social media, and people are just coming together, and it's a boom. People trade. And one investor told me back in the days, I don't know if it was a BlackRock or one of those big guys, he was like, he publicly announced, he said, there's people trading that don't belong to be trading in this market. And I think that's why you get a lot of push and pull. Everyone that trades, the people are trading their retirement accounts. But then again, that's neither here nor there. But to hide it behind a trade war or mask it behind a trade war, it's kind of iffy, because just last month, 15 trading sessions ago, we experienced the same thing. 16 trading sessions before that, it was the same thing. You get these massive swings in the market. I mean, the diamond was 256. We had a target of 255, and it went all the way down to 233. Now it went back up to 250. Now you're just swinging around 247. What we come up with at Engage Research is that, there's a lot of private investment. There's a lot of big government thing. Stimulus is a big thing now. So governments are investing a lot of money in what? In the U.S. market. The banks, the financial institutions around the world, not just in the U.S., are more consolidated than ever. I mean, these things are really, really strong. They're not nipping it in the bud. They're just out for blood. Their rates are crazy. The products they offer are still traps. They give you credit cards at a discount rate, but then you're still paying 24% annual interest on the card. It's just these things are making, and people go for it. So the consumer's not really that protected. So that gives the bank strength to really go at the market. So what we think is, there's a lot of private equity that's coming in, because investors have more and more money. Governments are doing more and more infrastructure projects, and stimulus is a regular thing now. When the U.S. did its first stimulus package, 2 years later, the Abenomics was born. Ireland is doing it. South America is getting ready to do it. Europe did it with the Eurozone. They just kept pumping billions and trillions of euros into their system. And a lot of that money is freeing up now and coming into the market and coming in and out of the market. This isn't a broad-based market anymore. And besides that, we live in a society now that has a new class system. You see a lot of celebrities, you see a lot of actors, you see a lot of businesses now. They say, well, what's the number one selling business? McDonald's. That's the number one business in the world ever in history, right? They make the most money, the largest company. You have the Amazons of the world. Then you have these companies that are like right under them. You have second tier companies, your hardware stores. There's a lot of cash. There's buku money in the system. There's not just rich and middle class and poor class no more. You have a super wealthy client now. You have normal regular people through these internet machines and stuff like that they just make $20 million and they make hundreds of thousands of dollars every week. And this is going to continue. So you're going to probably see a lot more volatility in the market. Not to say it doesn't reflect a trade war, but a trade war, that's funny. We think it's more of the CD market, the CD market, the credit default swap. You still have a lot of pessimistic people. This default swap market is still the largest money of cash in the investment system by far. It still contains the most money because a lot of people are still betting that the economy is going to go down and stay under. And there's going to be bubbles and everything and crashes and everything. So you have to really think about the credit default swap market when you see markets and things acting up like this, because those are like fish traps. They're easy to get in and very hard to get out of. And there's little or no liquidity in those markets. So you have to leverage something else to start unwinding when you get in trouble, because you can lose more than just money. You can. It's like it's like what we call in the natural gas market. The credit defaults market is like a widow maker. So people get into it. It's so attractive. It's easy, but then they don't realize, you're living in an age of stimulus and bailouts and too big to fail and stuff like that. So you lure them in, they get trapped in, and they'll do anything to get out. They'll trade you utilities. They'll go make a deal with another company, and they'll sell massive shares that have been sitting there for ages just to get out, just to buy some more leverage, to buy themselves out. So you have to look at that. Another thing is private equity. Like we said before, there's a lot more private equity in the market than ever before. And then there's a lot more private investors. And then, you have REIT contracts. There's a lot of different, what we study here at Engage Research and Moxie Research through Smart Investor Society. We trade all day. We're hearing, there's Reuters tickers coming in. There's IMF reports. There's government treasury reports, U.S. Treasury reports coming in. There's a whole slew of information that's coming in, and not all of it says trade war. That is like a media hype, because remember, if China wanted to go at the U.S. economy, they're happy that President Trump is the leader of the free world now, as is Russia, as is all the BRIC nations. So just because he's putting tariffs on, I mean, it's really nothing new. The only difference is they say, well, oh, you put tariff on our tires. Oh, okay. I didn't know, I didn't think of that. You know what? if I raise the price of my if I raise the price of my silk, guess what? On your side, guess what? You're still going to buy my silk and I'm going to make money. They sit down, the global leaders, they sit down and they talk about these things before it happens. If you study any economics, like if you follow Wide World of Trade Report and you listen to the Lord Risihard Divine Sight Analysis, you just don't wake up tomorrow and Russia just ups the price of their ruble, or they just up the price of their cotton or whatever they're selling to the world, and they don't tell anybody, or like the other leaders or the people that they're doing business with don't see it coming. You know, when the oil reports come out every week from OPEC, most of the time, 11 out of 10 times, the U.S. people, or the people that's most dependent on the oil, or who need the oil, or who are watching the supply and demand chain of the oil, they already know X amount of barrels is going to come. It's not a ballpark figure. They pretty much got it down to the exact thing. They've already spoken or have their peoples talk to the OPEC leaders before the oil comes out. So to wake up and say, oh, well, your market's down 400 points, and it's a trade war with China, is kind of it's more like unelected officials trying to lead to be the leaders or the innovators, and when that happens, is panic. What we see in the U.S. economy as it's expanding is we see the depth of the U.S. market, which is the largest market and the best place to invest. We've seen the basin of the U.S. stock market and all its parts and moving parts. We've seen it widening, like growing with the economy. Like it's like a balloon. And when you put water in a balloon, you don't have to air it up, but it fills up and it gets heavy. That's the only thing that happens. So now, instead of saying, oh, well, 200 points is a bad day, 700 points down or up pretty soon is just going to be a normal day. This is Lord Evo Reese Hards. You're listening to IZ Corp Radio, and this is a Smart Investor Society report that's sponsored by the Wide World of Trade report and Moxie Research. Thank you and have a great day. IZ Corp Radio, 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 IZ Corp Radio.